worst case scenario, it's about an 11% IRR on it. But best case scenario is we are able in 2 or 3 years to refinance those properties. They're able to recapture all of their cash back, and they get to be a 50-50 partner in it forever.
What's going on, guys? On today's episode of the Collecting Keys Real Estate Investing podcast, we have Camron Cathcart. And Dan, I got to say, that might be one of my favorite interviews that we have done ever.
Like, it has honestly, to be top 1 or 2. Like, I can't think of one, so it doesn't really matter if there's ever one better than that. I enjoyed every minute of it. Like, I was leaning in, I was listening. He's a great speaker too.
He's a great speaker and super like detailed in what he's talking about, and very rarely do we get people on the show that are such like true legitimate operators that, are doing good at the entirety of the business, right? They're good at the marketing. They're good at the sales. He has this acquisition strategy for buying long-term rentals that he talked about kind of at the end of the show, which is so interesting that I've never really thought about before, which is really sort of long-term focus and a great way to sort of deal with the current interest rate environment. And, we get pretty technical in this, talking about some of his metrics and KPIs and other things. And right away, just from those, we know that he's not a BSer because he's saying all the same stuff that we have verified investors and business owners saying. And, we get fully into just like how he breaks down his business. He basically built out his business in St. Louis. Now he lives in Maui and does the whole thing virtually, still doing like 60 plus deals a year, buying a ton of flips, doing a ton of wholesales. And he's just crushing it, man. Like, it was such like a great episode. And
it's refreshing to have somebody talk about their business and how they've pivoted it over the last few years, because markets change and you and I know that, how he's pivoted and is still getting after it. It was really refreshing. He wasn't living vicariously through 3 years ago stories.
Exactly. It's been, he started almost the same time as us, and it was so interesting to see how similar the progressions are, and I also do appreciate that he has his own show that he does with Brandon Turner. And he still took the time to come and talk to us. And just as a little maybe flex, maybe just like coincidence, Brandon Turner was in the room when we hopped on, which was kind of cool. So anyways, really, really good show today, guys. Like, this is one you can take some notes on, really, especially listening at the beginning to how he got started when he didn't have any money. It's a very interesting take on sort of like that initial phase of closing deals and getting the first bit of money in the bank. And like I said, just so many great pieces. So check out the show, share with anybody who is interested in doing off-market real estate, because there's tons of extra info in here that you're not going to get from Dan and I, because he has a different spin on things. And don't be afraid to give him a follow on Instagram, because that's why he comes on these shows to begin with. So enjoy this one, guys. A really great show today with Camron Cathcart. All right, guys, we are here today with Camron Cathcart. Dude, I'm so excited to have you on the show. We kind of bantered a little bit before, but it's very rare that we get like a true single family operator that has built something that is really, really impressive, and also does it in a virtual model, which is similar to how Dan and I does it. So, dude, I'm really excited to have you on. Why don't you give us a really quick breakdown about what your business currently looks like, and what your deal flow is, what your portfolio is, all that sort of stuff.
Yeah. So right now, my wife and I, we own multiple different LLCs, but really the two big ones are Revel City Properties, which is our rental portfolio, and Revel City Home Buyers, which is our house buying company. And we started in 2020. A quick backstory on that: I was a pastor and absolutely loved that, but wasn't making a ton of money, and wanted to figure out a way to make more money. And so we got into real estate at the beginning of 2020. And we, in 2020, we were kind of executing the BRRRR method. That was our goal, was to BRRRR houses. Cause I read Brandon Turner, he wrote a book on BRRRring properties, which is, for people that don't know, I'm sure most people that are listening to this do know, but buy, renovate, rent, refinance, repeat. And so we did our first one in January of 2020, and we were able to buy a cash flowing rental property that at the end had about $50,000 in equity in it. And it was cash flowing, $160 a month. So not a ton, but we were able to recapture all of our cash. And we were like, this is amazing. Let's do this as many times as we can. And that was in January of 2020. In February of 2020, we bought like 6 or 7 more houses. And in March of 2020, I realized, hey, I'm paying assignment fees on a lot of these, and I want to go direct to seller. And so I went direct to seller, and Since then, we have kind of just scaled that business to be at about, we're buying in 2020, 2021, and 2022, we were around 100 to 130 houses a year. 2023 and 2024, we've scaled back. In 2024, I think we're on pace for about 60 houses this year. And we've kind of switched our model to where now I would say it used to be a 60-40 split, and between we'd wholesale 60% and flip 40%. We're probably flipping 60 to 70% now and wholesaling 30 to 40%. So yeah.
Nice. It's so funny. Your timeline is so similar to ours.
Yeah,
like literally, you started in January of 2020. That's when Dan and I guess, officially started our business together. But we started exploring, same as you, we'd done burrs, and we were like, why are we paying these $30,000 fees, right? Mm-hmm. And that was at the end of 2019, and very, very similar paths.
So I'd ask you a question along the lines of this too. So I see, I'm guessing you're not at home where Rebel City is. It seems like, so do you do this virtually? How are you guys set up to do this?
Yeah, great question. We did not do it virtually for the first 3 years. We moved to Maui in January of 2023. And the first 3 years we were grinding. Like when we started in 2020, we had a very specific why behind it. And it was because I wanted to spend more time with my kids and my family. We have 5-year goals. And in January of 2020, we wrote on, my wife framed it and put it on us. But one of them was to live in Hawaii by 2025. And I say that to say, like, so we had a very specific goal in mind where it was like, we want to build this business and get out's a strong word, because I still operate it every single day. I'm in the business 30 to 40 hours a week. I'm just no longer going and walking houses, and I'm no longer connecting with, like, we can talk about how we buy houses. One of our big things is buying from connector leads. I'm no longer connecting with wholesalers, agents, property management companies, senior living facilities. I'm not the person that's boots on the ground anymore. But we specifically planned our business that way to grow into that, so we could move to Maui.
Yeah,
it just happened 2 years sooner than we had expected. So it was amazing.
That's great. Yeah, I mean, I like the way that you approach that, though, because I feel like so many people, they have this view that real estate needs to be like, you need to be in your location that you live or that you sort of understand. But it's like any other business, right? It has systems, it has marketing, it has sales, it has processes that you can make fully virtual if you want to.
I think too, with that, along that line, I would just add is like, we just got back from an in-person event we do with our group every year. It's called KeysCon, and one of the things we like to kick off with is like this dream visioning exercise, and it's like taking the time to vision what you actually want and like be okay with wanting, like, maybe I'm guessing moving to Hawaii by 2025 was a big thing for you guys. And so it's like putting it out there early on and knowing what you're working towards, like why are you doing all this, and setting it up that way so that when you are building it like this, you can do it virtually and keep operating it and actually still accomplish your goals. Yes.
So like talking about vision, and this sounds super corny, and I'm not like a super far out there, but I'm such a firm believer in like having a very specific vision of where you want to go. And I do this thing every morning. And again, it sounds corny, but I go and I meet with myself in 5 years. And so like I'll literally close my eyes and I will go and I'll have coffee. It's 5-10 minutes with myself in 5 years. And the thing with it is, when you're envisioning yourself in 5 years, you're envisioning like what your dream is. And so like I'm a better husband, I'm a better dad, I'm in a financially like better spot. And the thing that helps me with is then when I am living out my day, I'm aligned in the habits and the actions that I'm taking to be that person in 5 years. Where it's like, hey, if my wife and I are in an argument, I'm like, I could either like continue to argue and cause just, disruption in our relationship, but that's not getting me to where I want to be in 5 years. Or, hey, I could sleep in today, but that's not getting me to the person that I want to be in 5 years. And so having that clear vision of who I want to be in 5 years, and literally going and visiting that person every single day of who I want to be, it aligns my day to do the things and the tasks and the habits that I need to do to be that person.
Sure.
Well,
It's funny because, you said woo-woo-y people, like, they call that vision. Disciplined people call that intention.
Yeah.
Right.
Yeah,
It's the same thing. It's just a different mindset around how you approach it.
Sure.
So when you were building up that business, I mean, you got to a pretty aggressive rate of acquisitions very quickly.
Mm-hmm.
What did that look like? Were you doing like mass marketing? You mentioned a connector leads.
Yeah. So I would say one of the things that helped me a ton when I first started was really quickly, I bought a ton of properties, and I got kind of, I'm naturally a networker. I love to go to different meetups. I love to have coffee. I love to go grab drinks, and just meet people. And so I met probably the biggest house buyer in St. Louis, and became really great friends with him. And he took me under his wing, and I actually started buying houses for him. And so he was covering the marketing for me. I sat in and helped with a lot of the marketing. He was covering the marketing for me. And I was going out and I was using his money to buy houses, and I was getting, it was essentially like a JV agreement. I was getting a percentage of that. He was taking more because it was his money. It was his marketing. He was taking the risk. And so I did that for the first year of when I started. And so I was set up in that aspect of, hey, I was able to do it and have a really incredible mentor and not have a ton of risk and get to learn a ton in that very first year. And so when I say that I bought 100 houses my first year, I don't want to lie to anybody and be like, it was all me. I was using his money to do it. And he had already built up a marketing strategy to do that. So I was buying for him, and I was just, I was still out there buying connector leads, but even the connector leads were for him. And then really quickly after a year, I realized, hey, and I don't mean this to sound bad, but I can just go do this myself and keep 100% of the profits versus having this kind of JV agreement type deal. And so, but the connector leads was one of the things that pushed me towards that. So one of the things that I got really good at was realizing, like, hey, with wholesalers, even though there was a lot of direct to seller marketing that was involved, I realized that a lot of times I can find wholesalers that will sell me the house for way cheaper than they're going to sell it to anybody else. And that's just through relationship building. My first year, I started a wholesaler mastermind. And it was specifically for new wholesalers. And this was in 2020 when the real estate market was really hot, and everybody had seen an Instagram about what wholesaling is, and everybody wanted to be a wholesaler, but nobody really knew how to do it. And so I started a wholesaling mastermind for like 10 beginning wholesalers. And I was a beginner too, but I was leading that mastermind in St. Louis. And because of that, they saw me as a leader within that group. And so every time they got a direct to seller marketing lead, they would bring it to me. And I kind of even worked out something with them where every time you get a lead, bring me on it. I will negotiate the lead for you. Well, first of all, I'll walk the house with you. I'll run numbers on the house with you. I will tell you where I'm at. And then you tell me where you want to be at to get that split. And I'll walk in and I'll negotiate the number that you want to be at. And so I essentially had 10 to 15 people doing direct to seller marketing for me that I wasn't paying for. And they would just bring me their leads, and they would get paid money on it. And I'll tell you a quick story that like took this group off to the next level. Was one of the third or fourth weeks that I was hosting this mastermind. One of the guys in the group, he brings me a house, and he's like, "Hey, I just got this direct to seller lead." He was actually with he was sending direct mail through Ballpoint Marketing. He's like, "I got this lead. Can you come walk it with me and just help me on it?" It was his very first lead he'd ever gotten. I was like, "I'd love to." So we walk the house. It's in a great area, great part of town. And so we go and walk the house, and the entire time the lady's like, "If I get $200,000 for this, if I get $200,000 for this, I'd be so happy." So I already knew that we could buy the house for $200,000. So we walk the house, we step out to my car, I run numbers on the house. I actually, at this time, there was a bunch of hedge funds buying in the area, and I knew the hedge fund acquisition manager. And so I step out of my car, I call him real quick. He's like, "Yeah," he ran numbers on it. He's like, "I'll give you $250 for it." So then I step back into the car, talk to the wholesaler, and I tell him, "Hey, I'll buy this from you at $230." knowing that we're going to go in and buy it at 200. And so we go in, we buy it for 200. His very first deal, literally his first round of mailers, he makes a 30K assignment. I get it for 230. I, wholesale it to the hedge fund for 250. I make a 20K spread. But he brought that back to the group the next week and was like, Camron could have told me that he was at 205 for this, and I would have taken it. And so like that, like just that little like piece of integrity and caring about like the win for the other person, everybody in that group was like, Cameron's going to always do what he can for me. And after that deal, like every single person in that group would bring me deals. So it was actually crazy because I added it all up. Within those people, they were probably spending 60 grand on marketing every single month within those, and I wasn't spending any. I was just using them, spending the money, and I was like their person they'd bring on every deal. And so I would cut them in on every deal and give them an assignment. But it was a really fascinating model that I kind of built in that first year just to get a ton of houses that way. And we were still doing direct to seller marketing ourselves, but I honestly bought probably 70% of my houses from connector leads that very first year. The benefit that the person that I was buying houses for was, hey, we're going to do your marketing for you and we'll pay for it. Mm-hmm. And I was buying from connectors. I'm like, well, if I'm buying way more houses from connectors than the marketing that you're paying me for, I'm just going to go out and do it on my own.
Totally. Yeah. That's really interesting because you're basically just like, I don't know, like a benevolent mercenary. Like you were bringing all the hustle that they didn't want. They all had the, inside skill set to find the leads, but I'm guessing you're really, really good at the sales part, which is typically in our experience, the hardest part for people to figure out in this business.
Yep.
Yeah. I think the sales part is something that a lot of people don't have coming into it and for me, I'm super fortunate that it's the way that I'm wired. I truly do love people, and I love hanging out with people, and I love hearing people's stories. And I think that I come across is very authentic, and I mean, I am authentic. So I'm not saying that it's like a fake thing that I'm putting up to come across. Like I come across as authentic and have integrity and want to care. I truly care about every person when we walk their house and how we can help them. And there's been countless amount of times where I've pushed them in other directions than selling to me because it just didn't make sense for them to sell to me. And so, I was really good at the negotiation side of thing. And one of the things that I found with at least that specific group when we started was there were so many people that saw an Instagram post, that was when Deal Machine was just starting, and like, oh, I can go drive for dollars and I can send mail and just like click the app and it's going to send mail for me, or I can go drive for dollars and I can skip trace the list and I can call these numbers and try and get leads. But a lot of them were 22, 23, 24-year-old guys. And I mean, I was only 28 at the time, but they had no idea how to run numbers on a house. They had no idea how to pull comps on a house. They had no idea how to analyze a rehab budget. They had no idea how to come up with an offer. They had no idea how to negotiate it. And so that was the value add that I was able to bring to the table was, hey, I can do all of that for you. You just have to find the lead, and then I'll cut you in on the assignment. I'll figure out a fair assignment for you where I can still make money on the back end. And so it worked. It was a really great process because it was a win for them. It was a win for the seller, and it was a win for me. And so it was a win-win scenario across the board. So the other value add that I was bringing is like, I'm an open book. So I'm going to show you like, hey, here's the comps that I'm using when we're walking this house and we're analyzing this deals. Here's the rehab budget that I'm putting together. Here's where I think that we can sell it on the back end if we're wholesaling, or here's if I'm flipping it, here's what that's going to look like. And so there is a lifespan where eventually, and that was my goal, eventually they can go out and do it on their own, and they have all of the tools and strategies to be able to do it on their own. And so I would say with a lot of those people that I started with, they have gone out and done it on their own. And I still buy a lot of houses from them. I'm just not the only buyer now.
Yeah. That's so valuable what you're saying for anybody listening that's either like kind of in that new stage or starting out. You're calling it connector leads. It's just being a connector and being helpful and being valuable to other people. bringing value to other people. And we see that a lot. We have a close friend that's a lot like that. I mean, he's just based on him being a good person and connecting other people, he's able to monetize that, which is it's a really great skill to have. But also the part that you touched on earlier is like the ethics around it, like being honest and open and having high integrity, because the minute you don't, it's like you're no longer a connector. Right. Yeah. You're no longer valuable to anybody because now you've done something that's self-interested, unethical. And Mike and I run into people like this all the time. It seems like there's some people that only look for like that one transaction, and then they'll do whatever they have to maximize their profit on that transaction that one time. And it really spoils the relationship or turns you off for whatever reason. And I think those two things in this industry, high integrity and being a connector, are probably the two most valuable skills you can have.
Yeah, I would. I mean, it's the whole saying, like, you know, don't step over a dollar to pick up a dime. Exactly. And like a good story around that is there's a wholesaler that I buy from, and I've probably already bought 7 or 8 houses from them this year. And we've done one house this year that we made over 6 figures on. There was a flip, and then the other had probably been between that $30,000 and $50,000 range. So I mean, I've made $300,000 or $400,000 this year alone off of that wholesaler.
Wow!
But one of the cool like pieces of the reason that he sells to me, and I'm pretty much exclusive to him, is because we did a deal last year where there were no rehabbed comps on the house that he brought me, and so there were houses selling at $450,000 that were I would call them grandma clean houses. I, in my heart, knew this is a 500 plus house. I just didn't have comps to support it. And one of the things in our business is like, we don't go off of gut feelings. Like we do not, like there's no emotion involved. We are going to buy where the comps tell us to buy. And if we don't have a rehabbed comp, we're not just going to make up some arbitrary number and say, oh, this is a 515 house because all the other houses are 450 houses and haven't been rehabbed. Even though in my gut, I knew that, I couldn't run my numbers like that. So I ran my numbers as a 450 house, and we ended up buying it for around 250 from him. He got a $7,000 assignment on it, I think is what it was. And we ended up rehabbing it, and we sold it for $545 after the rehab. So we ended up making $150,000 on that deal. It was one of our biggest spreads ever. And I after we closed on it, I called him up and I was like, hey, write me a consulting agreement for $30,000. And I sent him $30,000 extra on top of that. I didn't have to do that. And I will say, like, there was strategy behind it because I knew doing that, like I'm his guy if I do that. I didn't have to do that, but it was one, I love the guy. He's an amazing person. He sold me the house that we did really well on, and I wanted to help him out and thank him for that. But also I knew, hey, if I do this, like, he's going to continue sending me deals because he knows that I'm going to take care of him. And, you know, this year alone, that $30,000, I've 10X'd already in the 6 months of 2024.
Yeah. And that makes sense too, because you're like that $30,000. I'm not saying it did this, but that could have been the wind he needed under his sails that he keeps going. And like you're saying, now you're still buying deals from him. So it's a really great strategy.
Yeah. Very cool. So that was the bulk of your business for your time in St. Louis. When you transitioned to moving to Maui, what did that look like? Right. Yeah. So obviously you're not there to like run the mastermind anymore. You're doing your due diligence and everything remotely. You're not walking your own properties. Let me start this way. When you made that transition, did you have a team, or are you still just like a one or two person operation?
So we have a team of, I would say, 12 people, and then probably 3 or 4 VAs. So I would say we're probably at about 16 people or so.
Wow. Nice.
On our team.
Yeah. Similar size. Yeah. So like mostly acquisitions.
Yeah. People. So we have 4 acquisitions. We have a lead manager, a marketing manager, a project manager, a maintenance tech, and then me and my wife.
Okay.
And then some EAs. And then I have a EA that kind of helps in a couple different companies. So.
Okay, cool. Can I ask you like some technical stuff on your business, just because this is always interesting to sort of hear how these numbers and stuff look. So you have what's your current form of lead generation?
So we do direct mail, and then retargeting is probably our biggest form of generation. Like
internet retargeting? Like just okay. What's your typical cost per deal right now?
Right now, it's not great. It's a bad question. We're probably paying about $4,000 per deal.
Dude, so it's so
right where
I always get freaking like excited because it's so interesting. Literally, these numbers are the same with every single major operator that we talk to.
I hear all the time they're paying $1,200 on social media.
It's because they're fucking liars, dude. Like they're lying to you. Yeah. Totally.
Good. I was embarrassed to say that out loud.
We're at, what are we at, Mike? 4,200 right now?
We're at 4,200 right now, which is higher than it was years ago. Yep. We just had Ryan Weimer on the podcast. If you know him, super good operator at Boise. He said he's at like 43 or 4,400. We have a friend down in Dallas who does hundreds of deals a year, 200, 300 plus. He's sitting even higher. I think what was Billy at when he was on like 48?
He was at 48. He has come down from 8 from like beginning of the year, which was a lot, but
yeah. But like verified operators, the numbers are always so similar. And so when you
that's our doing, test, so we know you're real.
Yeah, exactly. As soon as somebody says like 1,200, as soon as somebody says like 1,200, I'm like, this person's full of it. Yeah. And that's cool. And so you're doing this all virtually. What does that look like now? Is your team on the ground there? Are they like
they're all on the ground. So we're the only people that aren't on the ground anymore. And I don't want to paint this like vision to people that we just picked up and moved to Maui and retired. We are still very involved in the business. We have Tuesdays I have acquisition meetings, finance meetings, marketing meetings. Did I say Tuesdays? That's Mondays. Tuesdays, we have our full team meeting, our project man. Like we're still very involved in the business. I'm still doing acquisitions for us where I'm just connecting with all of I'm not doing any of our direct to seller acquisitions. Those are for people on the ground. Because one of the things that we do as a company is we make offers without any contingencies on every single house that we buy. There will be no contingencies whatsoever. So we have to go walk every single house that we buy. And we'll tell sellers that. And honestly, we'll tell them like, hey, if you got an offer over the phone, it's not a real offer. It's just not. They're gonna shop it and try and retrade. So we're pretty open about that, where we'll make offers without any contingencies. Every once in a while, we will. We will, if it's on septic or has terrible foundation, or if it's just a house that we don't want to flip ourselves and we don't feel confident about it, we'll be open and honest about that of like, hey, we are going to put this on a contingency, typically 14 days. And we're going to get some of our investors in here to see if they're interested in it. We think that they would be, but we want to be very clear with them. Like, you have to give us 14 days. Don't go planning your life with this money because there's a chance that this doesn't go through. But with houses that's one of the values that we bring to the sellers and even the wholesalers that we work with is we've never backed out of a contract before. And
ever?
And we've never backed out of a contract before.
That's crazy.
That's awesome.
So a contract without contingencies. Like we have with contingencies, if we have that, but typically we're honest about that, or not typically, all the time we're honest about that of like, hey, we're going to try and find somebody to buy this. One of our investors, we've really connected, but we can only offer you this if you let us put it on a 14-day contingency.
Sure. So that makes sense, especially if you're like an end buyer, because you do a lot of flips.
We do. Yeah.
I mean, so like that's one of that helps you sort of be comfortable with that. We used to do that a lot more when we were doing a lot more personal acquisitions, but we're almost 100% wholesale right now.
Really?
And so, our typical close rate, especially we are all virtual, is about 70%, which also is typical in industry average. But when you're doing the flips, I mean, that's the easiest way to knock out your competition is to remove all those contingencies, put down legitimate earnest money. If you're closing yourself, you should be comfortable doing that.
That's what we have found is one, we've kind of switched our model quite a bit. And part of that was the market forced us to where legitimate buyers have just dried up because there were so many people in 2020, 2021 that, again, saw a podcast or a social media post and were like, oh, I want to invest. And so there's a lot more buyers out there for us to wholesale to. And then, I don't want, some people don't love this, but I sold a lot to hedge funds. There was a lot of hedge funds in St. Louis, and it was like stealing candy from a baby because they told me their buy box exactly what they were looking for. And I could go walk a house literally, yeah, I could send the acquisition manager for the hedge fund pictures and they would get me an offer, and they were always good for it. And so then I just knew what I had to go get it under. So I sold a ton to hedge funds, and hedge funds in St. Louis have completely dried up. And so we've switched our model more to flipping focus. One, I think we do probably the best job in St. Louis at flipping houses. Like, our houses are beautiful. They sell quick. And it's also, it has given us, our profit per deal has went up to over $40,000, where nice. Typically we were around, I mean, we were always $40,000 plus on flips, but with our wholesale, we were at, 11K profit per deal. And so now we're still scaling back in the amount of transactions. We're still going to make more money than we did in 2022 and 2021 by flipping houses.
Totally. Awesome. Was that like a growing pain for you to switch over? Were you guys, as far as going more flips with manage the contractors? It sounds like you have a project manager, which probably helps a ton.
Yeah. So I would say that was one of the reasons we did it, is because we found a project manager who is a just stud. He's absolutely incredible. I think we hired one who was really great, and I don't want to knock him at all. When we hired one, we were probably 6 months in, so we were new to it. And in my mind, I was like, "Oh, we need to hire a project manager," and we were like, "Who's somebody that we know that's good at construction?" And so we hired a union carpenter to come manage our projects, which was great for probably the season of life that we were in, or the season that our business was in, where we were doing 3 to 4 flips at a time. But he didn't have the mind to manage 15 properties at a time. Right. He was a carpenter. And so where he helped us a lot was he was able to get into houses and swing the hammer and, hey, we're over budget here. Well, I'll just go do this. Now our project manager, he doesn't touch the houses, but he is able to keep track of budgets, keep projects moving along, and he can do 15 at a time. And so he's absolutely incredible. And I think he was one of the deciding factors where when we had him and we realized like we're adding more to his workload, and he's continuing to do great, and he's continuing to do great. And so he was one of the reasons that we were able to do that. And he was able to, with some of the crews that we had already built relationships with, but just from his industry connections, able to get more crews. So now we have 7 or 8 crews, and all of those crews have, a couple of them are 1 or 2 man shows, but a couple of them have 10 to 15 people that are on that. So they can, that crew can honestly knock out 2 or 3 houses at a time. So we're able to do it at scale, or flip.
Are those all subs, or you have people on staff?
No, those are all subs, 1099 guys. So our project manager basically manages all the subs.
Sure.
Yeah. I feel like that's a great model, because it's like best of both worlds, right? Mm-hmm. The project's being managed by your company, your employees, but you don't have that just major overhead of carrying 30 guys to go do all your flips.
Mm-hmm. Yeah. So I added it up before, and like we probably have 60 guys that are working at a time on our houses. Wow. But those aren't employees of ours. Those are 1099 guys that our project manager is just in charge of. So it makes it really easy for us, where we don't have the risk, the liability, or just the pressure on with me is kind of being the owner or the CEO, I guess, to have to manage them and keep them in line.
Yeah. Sure. Yeah. The management of that would be stressful. Not only if you're like, well, now I'm buying more flips just to pay these guys just so they can keep working. And there's just so much with that.
Yeah.
What about your capital situation? How are you paying for all these houses?
So when we first started, and again, when we first started, I was using private money. And so really I made a list of all of the rich people that I knew. And I just kind of went down the line and got told no multiple times. But my uncle, he'd said yes. That very first deal that I was talking about, that Burr property, where I think we bought that property for like $65,000. We put 30 into it. We got it appraised at 155 or something like that. It took us 60 days, and he'd given us 95, and we gave him $100,000 back in 60 days or something like that. And he's like, "This is amazing. Let's do it again." And so he's grown with us to where we have a lot of capital out with him. Obviously, as we've grown, we've needed more capital. And so we've been able to use our own capital quite a bit. We do use our own capital. So we lend. How we do that is we lend our own money to the home buying business. So we're still paying interest on it, but we're lending our personal funds to the home buying business. Nice. And then we have a great just hard money lender in St. Louis that we use. Cool. If that's kind of the last option, because that's the most expensive. They're at, I think with me now they're at 10-1, but still it's the most expensive money that we use. So that's if we've tapped out all of the other resources, I will use them. But we probably have, I would guess, 3.5 million out on the street. And we're not hurting for capital. I've just gotten fortunate that with my uncle, with this hard money lender, and then through just the process, I've had multiple different people reach out and say, hey, can I be a private money lender? There's probably been, outside of that very first house when I did have to scramble a little bit for funds, there's probably been 2 times over the last 4 years that I had to like pick up my phone and try and raise funds.
Sure. Yeah, that's awesome.
Yeah. What do you normally pay your private money lenders, or do you just like see what their ask is?
Yeah. So it's typically anywhere from 10 to 12%, but no points. Sure. And we'll just do a promissory note. So I won't even put them on. Yeah.
Cool. That's helpful. Yeah. It's also, I like your strategy. Mike and I do the same thing with lending yourself your money, because it almost like forces you to be more efficient with it, and also gives yourself almost like a little bit of a paycheck, because otherwise you're like, oh, I'm just putting money in here and it may or may not be giving me a return. At least there you're like guaranteeing your return. It kind of gives you some urgency as a business when you're reading your P&L to look at your true carry costs.
Yes. Yeah. That's important for us because, for instance, like we just did a house that we paid cash for as a flip and ended up taking way too long. And if it was just our own money and we weren't paying ourselves interest, I think we made like 35 grand on it is the profit. But, and so like we could be like, we made 35 grand. But we had $300,000 of our own capital tied up into it for 6 months, you know? And so, so really if we were using anybody else, we would have made 12 grand or something like that. I don't know the numbers on it. And so it's important to pay ourselves, one, just because you can see your true numbers, but two, we also pay our acquisition managers off of commission. And so they, like, if they find a house, they get 25% of the profit. And I don't think it's fair, for them to get 25% off the 35,000 because that's not a true number. So it helps also track that, where it's like, hey, even though it's our own money, it's not the company's money, it's Lexi and I's money.
Right. Sure. Exactly.
Yeah. I noticed you saying our and we a lot. Is your wife involved in your business?
Very. Yes. So it's my wife and I were co-owners of the business. So really how we started the business, and this was one of the reasons we were able to scale so fast, is because from day one, we had our lanes and we never really crossed paths. And so from day one, I was in charge of basically getting a deal to the closing table. And once we closed on it, she was in charge of everything else. And so what that did for me when I first started, I was literally able to spend 60 hours a week just out there finding deals. Like I was in charge of finding deals and putting them under contract. And then once we closed on it, whether it was a rental property, because I think that first year we added, 20 rental doors to our portfolio. So whether it was a rental property or whether it was a flip, she was in charge of the rehab of that and getting tenants in those houses that we were buying, or managing the flip. And that was why after like 6 months, her job got to be a lot, which we hired on the project manager. But that was so helpful. And that's kind of the same flow we have to this day, where she is still over Steve, she's over Connor, who's our maintenance tech. We've built a property management company, which is really just VAs. But she's over them as well. And so that's her role. And then I'm still in charge of kind of the front end of the business, which is acquisitions.
Nice. So you guys are both definitely really busy. I know you've mentioned it, but you guys definitely both are full time. That's a lot of stuff. And just what you listed off with your wife is doing, that's a lot.
Yeah. That's great.
Yeah. And I try my best to never paint this picture. But one of the biggest disservices that like we can do as operators is paint this vision of it's not that hard. Because totally. I work a lot. And we've been really successful, and I'm very happy to work a lot because of the return that we're getting. And I will say, like, being an entrepreneur, I also am able to say, hey, I'm going to stop working at 10 o'clock this morning after these meetings. But I also have days where I work 18 hours, and so I don't ever want to give off this like, oh, I've got a team that just runs everything for me, and I'm sitting here drinking Mai Tais in Maui. That's not the case. I sometimes wish it was, but that's not the case. We work a lot.
You just leave that for Brandon to do for you.
Exactly.
Yeah, exactly. Yeah. But now that's super cool though, that you guys were able to build that together and set that balance. I know that's something that Dan and I get asked about a lot, is how we balance things with our spouses. Neither of our spouses are involved in our business. But it's such a challenging thing that so many men that get into this business deal with, because, there either isn't the interest or like the skill set isn't there. Right. And I think being able to do that, it's awesome because you're able to have these different expertises, but also too, you're able to keep all the money versus like having a business partner.
Yep.
That's the beauty, I think, of it. That, well, there's so many benefits to it. One, like, I love my wife; she's amazing, and we've definitely gotten to some really heated fights. Just running a business together, and we have to set up boundaries within our relationship of like, hey, on date nights, we're not talking about business. And so there's a lot of challenges with running a business with my wife, but it's also, she's my best friend, and I get to run a business with like the person I'm going to spend the rest of my life with, and somebody that I love more than anything. And then on top of all of that, like, there is the aspect of it where it's like we own, $15-16 million in real estate, and we don't have partners on it. We don't have to split all of our profits 50-50 because we own the business, but we have two really hardworking people, because there is no way that we would have been able to scale the way that we had if it was just me or if it was just her. I would have had to have brought in a partner, but we just were super fortunate that we both took our lanes and we ran 100 miles an hour down those lanes and were able to grow the business together.
Yeah, that's awesome. Yeah. So we're coming up on time pretty quick. I'm really enjoying this conversation. I have one more big question for you that I'm curious about from an operator perspective. Are you still buying like long-term hold stuff with current interest rates and the economic situation?
Yes, but I'm paying those off in cash right now.
Interesting.
So we could get into that a little bit. So we've just changed our strategy. And I'll give you a quick reason why, which you guys already know this, but in St. Louis in 2020, 2021, and the beginning of 2022, it was so easy to burr properties. I could be all in on a house for $180,000. It would rent for $2,000 a month. Awesome. And that would cash flow $300 or $400 a month. 400 is probably pushing it. It cash flowed $250 to $300 a month. Now that same property negatively cash flows $200 a month. And so, and I get really annoyed with people that say that they're buying long-term rentals, because I know that, like, hey, I'm above the 1% rule, and it's not cash flowing. Like it's 7.5%, 8%. Like, it's not cash flowing. You're either running your numbers wrong. You're not including CapEx, maintenance, vacancy. You're doing something wrong here. If you can cash flow at the 1% rule, or the one, for us, like, it has to be 1.5% for it to cash flow. Honestly, that's a quick way just to, if we're going to be all in for 180, it probably has to rent for $2,500 a month for it to cash flow.
Right. So
we didn't buy many rental properties in 2023. Flipping properties and wholesaling properties, we make a lot of money from that, and it's great money. But a couple things: one, it's still a job, and two, it's not building the long-term wealth that I probably wanted to build. And so I still believe in rental properties and think that that's the greatest thing that I can do for our business. It's just hard to do right now. So what I have done, and this is just recently started, and we can do another podcast or just talk offline about it, but I did start a fund that is buying rental properties unleveraged. So we're buying them in cash. The investors are getting 100% of the cash flow. I am getting an acquisitions fee on those ones that we're buying, which is really not going to me. It's going to the marketing and our project manager to rehab it. So I don't really make any money off of that. But then it's a 50-50 split on the back end equity. So what the benefit for the investor is the way that we buy houses, there's typically always going to be $50,000, $60,000 of equity because we're buying off market, direct to seller, so there's always going to be some equity on the back end. And the goal with it is if interest rates ever drop, then we'll refinance, they'll recapture all of the money that they have invested, and they'll just be a forever partner on those homes with those investors, a 50-50 split of cash flow and of equity. Worst case scenario, interest rates never drop and we have to sell. And, the way that we have it written out in the terms is in 7 years, if interest rates, we can't make them cash flow by recapturing all of your capital, we will sell. And they're still going to make it's about a 6.5 to 7% return on their capital in cash flow. And then they'll make 50% of the equity on the property whenever we go to sell it. So it still pencils out to like worst case scenario, it's about an 11% IRR on it. But best case scenario is we are able in 2 or 3 years to refinance those properties. They're able to recapture all of their cash back and they get to be a 50-50 partner in it forever.
Yeah, that's super intriguing. I mean, that's probably the most unique, I think, idea, I guess, the way you spun it that I've seen people doing from a buy and hold standpoint, just the way you structured that fund, that actually makes a ton of sense because the challenge becomes it is that we still get really, really good opportunities every day to buy really good real estate. Mm-hmm. This doesn't cash flow under traditional BRRRR methods.
Well, and that's what was making me sick is I was passing on properties or I was flipping properties that I know I will be kicking myself in 10 years that I sold it. Like in great areas for us, like the 3-2, like rectangular brick ranch is like our bread and butter for rental properties because they're easy to rent, they're easy to maintain. And I was having to pass on those because the numbers didn't pencil out. And so I honestly just spent a long time over a couple of weeks of like, how can I make this work? And there's some benefits in there for me too, where it's like I do get an acquisitions fee on every house that we buy, which goes to paying people, but it still keeps them fed. Mm-hmm. It helps with our marketing costs. And then we do charge for property management. So we're making a little bit of money, but that's just going to paying for our property management company. So there's some benefit there where it just keeps the lights on as well, where I'm not making a ton of money on it. But for me, rental properties, we make enough money flipping and wholesaling where rental properties for me are the long-term game where it's like, hey, can we leverage these and sit on them for 30 years and let them appreciate? And, that $200,000 house in 30 years is now worth 600,000. And I've got, 500 of those. Like I'd be really happy with that.
Yeah, and that's the mindset that Mike and I feel like have really been pushing. We talk about like make massive income before passive. And what you're explaining is like this idea of like you make enough money in your active business to like survive and to invest, but you're missing out on the opportunity of real estate, which are the huge tax benefits and appreciation, and then eventually potentially leverage, right? That can really obviously maximize that. It's really cool. It's really cool to hear.
Yeah. How do you handle like reserves and stuff for that? Like, for example, let's say you have 10 properties and suddenly 3 of them need new roofs. Are you doing like a capital call for that? Or do you recycle some of the cash flow and like put it into a reserve account?
In the fund?
In the fund, yeah, like specifically for the fund.
In the fund specifically, how it works is, there's only 4 investors in the fund. And they're all 25% owners. So I'll find a house and let's say I'm buying it for $100,000. It needs $30,000 worth of work to it. So I will say, hey, here's what I'm buying it for. Here's the rehab. Here's the acquisition fee. And then we're going to have $10,000 in reserve on it. And so then, and I'll tell them, hey, here's what each of you guys need to wire me. We have an operating agreement and everything that we set up. And so I already have $10,000 in reserves on every single property. But then on top of that 7% cash on cash return is after paying for property management, paying into, we use a profit first model. where we have a vacancy account set up, we have a CapEx account set up, we have a maintenance account set up. And so before they get their cash flow, we're paying into every one of those accounts every single month. So we're building those over time. But also the way that we will do our rental properties is, we're bulletproofing them. We'll never buy a house that's turnkey and just put a renter in there. We're buying off-market distressed houses. We're doing new LVP, new kitchens, new bathrooms, PVC plumbing, typically new roof, new windows, HVAC, electrical. So the hope is that there's not a lot of maintenance that's needed on those houses for years to come.
Awesome. Yeah, that makes a lot of sense. Yeah, that's super smart. Like Dan said, that's the most unique way that I've heard of to set up like the acquisition side of this business, which is so hard right now. Because our method for getting like passive income right now has been through a traditional hard money fund, which works well for us, which is great. You still need a lot of capital, but it doesn't have like that upside equity potential like you're describing. And if you're bullish on real estate, honestly, your way is the way to go, because you're completely right. If things continue to go up like they sort of have been doing, you're going to have a huge payout at the end, even though you might, you don't necessarily have a great velocity of money right now. It really is that true long-term growth. And then since I imagine with the LLC structure, how it is, you probably get some of the tax benefits and those things.
Yes, I get the tax benefits on them. Awesome. And really right now with our personal portfolio, because our personal portfolio is about $15 million. And then with the Cathcart Capital is what the fund is called. It's probably 14 houses. We've probably spent about $2 million this year so far on those houses. And so, but with Revel City Properties, our personal portfolio, we're able to probably reap all the tax benefits from that we need to right now. But with Cathcart Capital, the thing that I'm most excited for is that these guys that are all investing in this, they're all high net worth individuals. And for them, like, if we can refinance, then we just want to do it again and again and again. And so to me, there is the potential to continue growing at a really fast rate. And they've all even said like, hey, if we can refinance it, let's say 50% and make it cash flow, we want to do that, and then go use the $3.5 million, I guess, that we would have and turn that into more property. So I think there's a lot of potential with it.
All right, guys, we are going to dive into the end of show questions here. So Camron, we ask the same 3 questions of everybody that comes on the show. Don't worry, they're relatively simple. They're not, what's the meaning of life or anything like that. But the first question, which is always the group favorite, is what is your craziest real estate investing story? And this is like the one that, like, if you're trying to be the crowd winner at like a party, right? Or you're like in a car with an Uber driver and you want to like really make this guy, blow his socks off. What's the first story that comes to your head as your craziest real estate story?
Yeah, the first story that always comes to my head, like, obviously a lot of just like disgusting houses that I've walked. Yeah. But one of the most interesting stories, I think it was probably crazy across the board, is I got a call. It was actually from a direct to seller lead. I don't remember exactly what list we were mailing, but I got a call from a guy and he's like, hey, my dad just died and I'm selling his house. Do you mind coming over and checking it out? And so I was like, yeah, sure. I set up an appointment for that day. I went there and was just, chatting with him, trying to build rapport and talking about his dad, his family, and everything seems normal. And we're walking the house and he opens up the door to a bedroom and we walk into it and his dad is laying there dead in the bed still.
Oh, like while you're still there. Jesus.
Well, I found out that his dad had literally died 10 minutes before he called me. Like, literally his dad dies and he's calling and trying to sell the house.
No.
Yeah. So I'm like, you really want, so that was very, I've just never seen a dead body in a house before. So that was the, I guess, the wildest. I mean, I've been in a lot of murder scenes and stuff like that, but typically the body is gone by then. So,
yeah. I mean, who knows if that was not one a murder scene or not? That's crazy.
I usually tell people not to pick a dead body story because we get a lot of those, but that one's unique because
normally
you guys
get a lot of dead body stories.
Oh, all the time.
Yeah.
But usually it's like one of my tenants died and my property manager found them when they had dissolved through the floor, The fact that it just happened and they were like, yeah, come on over. Don't mind dad in there. He's fine. That's wild.
Yeah.
So, all right. It's a good one. Second question. What is the number one tip you have for small time investors looking to take the business to the next level?
Yeah. I would say that, and we kind of already touched on this, but it's my biggest piece of advice to anybody that wants to get into real estate investing. And I personally don't think that you can do this as a side hustle. Yeah. And so like, I want people to know and be realistic with the expectations around real estate investing, where you can be a weekend warrior and you're not going to make money and you're not going to have the systems and the process is set up to be able to be successful. And so for anybody that's listening to this that is like, hey, I want to do what Mike and Dan are doing, I want to do what Camron does. Like you have to go all in. It's not something where you can do it on the side unless you have just a really high W-2 job and you have enough money to put money down and keep money tied up into deals. Like you have to go all in and you have to go off market, and you have to be available when you get a lead from somebody to drop everything and go walk it. Like it's just, I think it's unrealistic because I talk to people all the time that are like, yeah, I want to do what you do. I've got 3 hours on Thursdays and Saturdays. I'm like, it's not going to work. Right now.
We literally just kind of like Mike and I this last week, we were talking to a group of people and the comment was like, what got you in this business is not what keeps you in this business. Because everybody thinks they want to buy a rental property or flip a house, but if you really want to do it, that's not going to get you. That's not going to keep you here.
Yeah,
exactly. Yeah, and that's great. And the speed to lead thing is so huge. In fact, in our little Slack group for our scale community, right before this, somebody was saying they've been having trouble with their conversions on their sales, and they listed out all their steps. And I said, what's your timeline for that? And they said about a week. And I was like, you need to be doing that in 24 hours.
Mm-hmm. We have a 30-second goal on any direct to seller lead.
That's awesome.
If we don't answer the phone, we need to be calling them back within 30 seconds.
That's awesome.
That's amazing. That's the fastest I've heard.
Right
yeah.
Yeah. So that's very cool.
Might implement that.
Yeah. Last question. Where can people find you, follow you, and reach out to you?
Yeah, just I'm probably most active, which is not even super active on Instagram. And it's cam.cathcart. But I'd love to chat with anybody. Cam.cathcart on Instagram is probably going to be the best route to find me.
Yeah.
And then awesome. Our business is Revel City Home Buyers. So if you wanted to go check out our website, I bet it's for a house buying. So there's not much that you can get there.
Sure. Yeah. Fair. Yeah. I do enjoy your Instagram though. I like your little coffee with Cam videos that you do. I think those are solid. Yeah. Well, Cameron, dude, seriously, thanks so much for coming on the show. That was a really, really awesome conversation. These sort of conversations, honestly, are like the ones that make me not want to stop doing interviews. Yeah. Like it was really, really good. And it's really awesome to see the success that you've had. So congratulations.
Thank you. It was a blast to be on. And thank you so much for thinking of me and having me on.
Yeah, absolutely.
Yeah. I'd love to stay connected and just pick your guys' brain about what you guys are doing to buy 15 to 20 houses a month. And that's incredible. So
yeah, absolutely, man. All right, guys. Well, thanks so much for tuning into the show today. If you guys didn't get any value out of that, I don't know, just go quit the industry or something because it's not for you, because that was about as good as it gets in terms of a operator interview right there. Go give Cameron a follow on his Instagram. He also does the Better Life podcast with Brandon Turner in case you need like a little extra, I don't know, reason, like incentive to go follow one of the biggest names in real estate out there. But he does do good stuff on Instagram. Remember, people do these shows because they want to engage with you. They want you to reach out. They want to chat with you. They want you to follow them. So don't be shy. Go say what's up and let them know that you heard the Collecting Keys show and that you thought it was really solid. Besides that, everybody, we appreciate you all and we'll talk to you guys next week.
Thank you.
Thank you.